Copyright disclaimer. Under Section 107 of the Copyright Act 1976, allowance is made for fair use for purposes such as criticism, comment, news reporting, teaching, scholarship, education and research. Fair use is a use permitted by copyright statute that might otherwise be infringing. Welcomes to Chartered Accountant channel. Today taking about Chapter, Theoretical Framework. Unit 1, Meaning and Scope of Accounting. Video No. 3. Distinction between bookkeeping and accounting. Some people mistake bookkeeping and accounting to be synonymous terms, but in fact they are different from each other. Accounting is a broad subject. It calls for a greater understanding of records obtained from bookkeeping and an ability to analyze and interpret the information provided by bookkeeping records. Bookkeeping is the recording phase while accounting is concerned with the summarizing phase of an accounting system. Bookkeeping provides necessary data for accounting and accounting starts where bookkeeping ends. Bookkeeping. It is a process concerned with recording of transactions. It constitutes as a base for accounting. Financial statements do not form part of this process. Managerial decisions cannot be taken with the help of these records. There is no subfield of bookkeeping. Financial position of the business cannot be ascertained through bookkeeping records. Accounting. It is a process concerned with summarizing of the recorded transactions. It is considered as a language of the business. Financial statements are prepared in this process on the basis of bookkeeping records. Management takes decisions on the basis of these records. It has several subfields like financial accounting, management accounting, etc. Financial position of the business is ascertained on the basis of the accounting reports. Relationship of accounting and bookkeeping can be depicted in the following chart as Subfields of Accounting. The various subfields of accounting are: Number 1, Financial Accounting. It covers the preparation and interpretation of financial statements and communication to the users of accounts. It is historical in nature as it records transactions which had already been occurred. The final step of financial accounting is the preparation of profit and loss account and the balance sheet. It primarily helps in determination of the net result for an accounting period and the financial position as on the given date. Number 2, Management Accounting. It is concerned with internal reporting to the managers of a business unit. To discharge the functions of stewardship, planning, control, and decision-making, the management needs variety of information. The different ways of grouping information and preparing reports as desired by managers for discharging their functions are referred to as management accounting. A very important component of the management accounting is cost accounting, which deals with cost ascertainment and cost control. Management accounting will be dealt with at higher levels of the Chartered Accountancy course. Number 3, Cost Accounting. The terminology of cost accounting published by the Institute of Cost and Management Accountants of England defines cost accounting as the process of accounting for cost which begins with the recording of income and expenditure or the basis on which they are calculated and ends with the preparation of periodical statements and reports for ascertaining and controlling costs. Number 4, Social Responsibility Accounting. The demand for social responsibility accounting stems from increasing social awareness about the undesirable byproducts of economic activities. As already discussed earlier, social responsibility accounting is concerned with accounting for social costs incurred by the enterprise and social benefits created. Number 5, Human Resource Accounting. Human resource accounting is an attempt to identify, quantify, and report investments made in human resources of an organization that are not presently accounted for under conventional accounting practice. Users of accounting information. Generally, users of accounts are classified into two categories: A. Internal users and B. External users. Management accounting is concerned with identifying information requirements as well as methods of providing such information to management, while information requirements of the outside users are generally served by financial statements. Following are the various users of accounting information. Number 1. Investors. They provide risk capital to the business. They need information to assess whether to buy, hold, or sell their investment. Also, they are interested to know the ability of the business to survive, prosper, and to pay dividend. In non-corporate sector, where ownership and management are not essentially separated, the owners still need information about performance of the business and its financial position to decide whether to continue or shut down. Number 2. Employees. Growth of the employees is directly related to the growth of the organization, and therefore, they are interested to know the stability, continuity, and growth of the enterprise and its ability to provide remuneration, retirement, and other benefits, and to enhance employment opportunities. Number 3. Leaders. They are interested to know whether their loan principal and interest will be paid back when due. Number 4. Suppliers and creditors. They are also interested to know the ability of the enterprise to pay their dues. That helps them to decide the credit policy for the relevant concern, rates to be charged, and so on. Sometimes, they also become interested in long-term continuation of the enterprise if their existence becomes dependent on the survival of that business. Number 5. Customers. Customers are also concerned with the stability and profitability of the enterprise because their functioning is more or less dependent on the supply of goods. Suppose, a company produces some chemicals used by pharmaceutical companies and supplies chemicals on 3 months' credit. If all of a sudden it faces some trouble and is unable to supply the chemical, the customers will also be in trouble. Number 6. Government and their agencies. They regulate the functioning of business enterprises for public good, allocate scarce resources among competing enterprises, control prices, charge excise duties and taxes, and so they have continued interest in the business enterprise. Number 7. Public. The public at large is interested in the functioning of the enterprise because it may make a substantial contribution to the local economy in many ways, including the number of people employed and their patronage to local suppliers. Number 8. Management. Management as whole is also interested in the accounts for various managerial decisions. On the basis of the accounts, management determines the effects of their various decisions on the functioning of the organization. This helps them to make further managerial decisions. Thank for watching. Follow videos and learn more.